we're spending a lot of money and time into R&D preparing for the bull market. The bull market comes, then you can like show this to investors and raise a bunch of money. Genuinely, you enjoy watching people succeed. In this process, you make a bit of money.
We have now raised. Where should those proceeds go?
Yeah, it depends on the market. If it's like bull market, I'll probably say spend a bit more on our marketing. If it's bear market, I'll probably say spend zero on marketing.
That's like zero, completely not.
Yeah.
So where does that money go then? Does it go to a product or?
Any marketing you do during a bear market, it's going to be completely wasted. Completely wasted. I tend
to agree, but where does that money go then? So let's say I think we have two good examples, right? So let's maybe start with the bear market. So okay, bear market, no marketing. So where does the money, like we raised in a bear market successfully, which is crazy, super happy. Yeah. What are we gonna do now? Not spending it on marketing. That's one.
Yeah. So if there's two ways to do it, right? If you're in the bear market, you should be spending your money either in R&D or product development.
Right? And by R&D, what do you mean by R&D?
Like R&D as opposed to like for example, a lot of companies are like spending their money on building infrastructure or researching around infrastructure, right? So not necessarily spending all the money on developing the infrastructure, but spending the money to research and to figure out what the narrative. So more building like the decks, like the content, like the white paper, the stuff that you can, like the bull market comes, then you can like show this to investors and raise a bunch of money, right? So like that type of stuff is much more, in my opinion, much more important. Like the R&Ds, right? Than the product development. But if you already have a product, then you can obviously innovate on top of your product, right? Like for example, like during the FTX, FTX actually did build a really incredible product that solved a lot of, the funds issues with the OTC and all that stuff, right? So it's like, then you can innovate on that. But again, the whole point here is they were smart about it too, because during the bear market, they were also spending some time on R&D and they decided to launch FTT, right? Same thing with some of our portfolio companies that did really, really well. It's like they were investing a lot of R&D into pivoting, into figuring out how to utilize NFTs, and so they spent a lot of time building content. And then when the bull market came, they pitched it to new investors, they pitched it to new partners, and people loved it, and it went like 30x. Some of the most under like I guess a lot of people don't usually do, but I think it's incredibly important. Like, even for us, like as a fund, like when we're during the bull market, obviously we're quite active, but during the bear market, we're spending a lot of money and time into R&D preparing for the bull market, for the next bull market, right?
So
and then
sorry, go ahead.
And then that ultimately led to our decision to invest in Oranos and DeSci.
So Bear, spend your money on research, do a lot of R&D, less product, no marketing, clear. So what about, now the bull, right? So we raised a ton of money in the bull. Everybody's happy. Everybody throws money at everything. Where are we going to spend our money? Is it now marketing?
It is mostly marketing, yes. Marketing, product, just enough products so that the exchanges, like you guys have the capability and the tech and enough capacity to actually build something. Like there's something that's really interesting about this industry. It's like there's like there's like a lot of scam, like there's a lot of scam and there's a lot of memes, right? And the way I define a scam is like you tell people you can do this, but you can't actually do it. And there's a meme is like you just tell people there's like you'll never achieve this. You'll never have a roadmap. You'll never have any utility. And it's people are perfectly fine with it. And in my opinion, it's like memes are not scams, right? I think it's the utility tokens are mostly scams, right? It's like they tell you that they'll draw a picture. It's like, and again, like the early days of ICO, right? There's like it's like you're basically selling a dish before the restaurant has been built, and at the end of the day, the customers will never even taste that dish, right?
Well, to that point, memes are very transparent. Nothing will come out of it, and if you're okay with that, you know exactly what's going to happen, right? That's I think the call it the value of the meme tokens.
Yes, but to answer your question, I think in the bull market you're definitely spending a lot more money on marketing for the exchanges so you get listed. Spending a lot of building community so that people get excited about your product. Like
Right.
again, like product, you can have like the worst product ever, and you can still get a bunch of users involved because there's like a to earn like framework or model involved,
Yeah.
right? And that's like the unique part of our industry, which is like people generally accept doing like things that are stupid and boring, but then at the end of the day, if they make money, they'll do it.
Yeah. This is very true. And it sometimes makes my product heart bleed a little bit. I'm like, guys, but they're such a nice product. It's like, no, we're degenerates because we can earn something from this. Yeah.
Yeah.
So I'm going to dip in here and rapid fire the last 3 of the 10 portion, because there's just been so much good stuff coming out that I haven't wanted to interrupt and shove us along. But really the meat and where I'm really excited to get to is the brainstorming component. So I'm just going to rapid fire these, bullet point them back at me, and we'll jump into the brainstorming piece.
What is the question regarding the
Yeah, so there's 3. So the investor value add beyond the capital. What's a green flag for entrepreneurs when you're looking at an investor or an advisor for a Web3 startup? What are generally like the bullet points, the criteria as green flags for an investor?
Yeah, so I think a good way to look at it is, obviously there's branding component. There a lot of investors are also generally quite equipped with the knowledge to build tokenomics. A lot of investors, that's like the general kind of like, that's just general skill set, right? They'll be like, hey, take our money because we have good brand. We can help you with tokenomics. We can basically be the consultant or the advisor without actually, taking additional tokens or USD. And so we're like, we're the expert in finance and tokenomics, right? And even fundraising, right? It's all that stuff. But beyond that, it's definitely the investors that can provide a lot of community, like real organic growth in your product. And I'll give you an example. So we invest in, again, like in a lot of Bitcoin layer ones. Like part of our job is to get a lot of good developers, a lot of good projects built on top of that chain, not that protocol, in order for the community to see that just alpha going on, right? There's like, you're basically building alpha for the retailers, for their community, right? That's important. I think that's important because if there's no alpha on the protocol, then people are not gonna want to build. It's like a chicken and egg thing, right? It's like you got to have community users or followers first before you're able to kind of track like more developers into the ecosystem. So that's what we do a lot. We try to, not just from a project perspective, but more from an ecosystem perspective. Like Bitcoin layer 1 is so early right now. Like we don't even care if you're just building on BRC20 or TAP or runes or rings or whatever, right? As long as you're building on Bitcoin layer 1 is a win for Sora Ventures. And so the way that we do it is we've hosted a conference. So, last year we did a conference called Sora Summit in Taipei, end of the year. And this year we're bringing it back again, 2 days. We're flying in DJs. We're expecting more than 100 speakers just on the Bitcoin side. It will most likely be the largest Ordinals conference in the world. And so if you guys ever want something crazy where it's like everything Ordinals and you can get runestone and stone everywhere, like that is the conference to attend. It's going to be end of the year. So like these are things that for a fact that like it's tangible, right? This is there, right? It's like
real.
It's real. And so like when an investor is able to do something like that, it not only shows that they're willing and able to bring in a lot of the resources for you, but more importantly, it's like they understand that they're not like this one individual who just are here just to make money, but you also care about the ecosystem. That is very important because every investment firm, almost every investment firm in our industry in Web3, they're all called a VC. Everyone's called a VC. But it takes a very specific trait, like a very positive, like a very unique trait and character to be a true VC. Like for example, in the traditional finance, in the world of finance, there's VC, there's PEs, and hedge funds, right? Hedge funds, they look at numbers, right? PEs, they look at numbers, right? They look at a lot of attractions, they look at a lot of things. Like VCs is by far the ones who generally don't look at numbers the most out of the 3, right? But in in our industry, there are going to be VCs who only care about paper money, who doesn't even care about if you're going to make it or not. They just want to get the paper money, the 5x, 10x on paper. And from their perspective, they're okay with, investing in higher valuations because they're able to get a 2x return, but it's going to be like a 10 million return, right? And there's going to be VCs like us who cares more about like the 100x return, the 50x return, right? And then but then they're all called VCs, right? That's a funny thing. They're all both VCs, but then they have entirely different business models, right? And there's also VCs who are just like, we're just here to pump and dump, right? And there's like a lot of that, right? And there's also VCs who are like, during the bull market, they're like, we're investing in everything, and then spray and pray, right? And then during the bear market, they're like, we're not even here, right? They're also called VCs, right? So it's like, there's so many types of different investment firms out there that are called VCs, but entrepreneurs do not realize like these VCs are not actual real VCs. Like most of these VCs are just here to make money. And so in order to be a real VC, you got to be a giver. You got to be a very genuine giver where you believe, because the VC model is in order for you to make $1, your portfolio company will most likely have to make $100.
Mm-hmm.
Right. So you're only getting a small amount of profit based on the overall success of your portfolio company. Like that's how the VC model works. All right. In what business does it require like anyone to be like, hey, you make it 100x for your portfolio company and only get like 1%, right? So you have to be a true giver. You have to be a true giver. You really like genuinely you enjoy watching people succeed. In this process, you make a bit of money. It's sustainable, but like that's how the VC model works. Not a lot of people are like that in our industry.
Absolutely no. I mean, this is one of the first times I hear the narrative of how I personally look at VCs so well explained by somebody in the industry, because it's very often the other way around, right? Like
for sure.
That's the biggest. I always joke with Charlie and with some of my friends that are in the same industry. Is like, VCs are necessary evil, but they aren't if you're a true giver, because now they become support, now they become help, right? But very often they're necessary evil because you need their money, but they will not add any value, or they steer you actually in the wrong way.
Especially in Web3,
especially Web3, yes.
Especially in Web3, yeah. I tell my friends who are in this industry, they look at us as like, oh, you guys make a lot of money. I'm like, you guys don't know like how complicated and how complex and how shady this industry is, even after so many years, right? It's 99% scammers, regardless of your project or VC, and you're 1% the giver.
Yeah, there's a lot of takers in this space.
A lot of takers, 99% takers, right?
A lot of
Some are takers, like extremely called scammers, but generally they're 99% takers, 1% giver. Yeah. And so it's really, really hard to look for VCs who are genuine about what they do, who are genuine about growing ecosystem, who actually enjoy watching people grow more than themselves.